Hey everyone, welcome to this week's Swyftx Squawk with me, Pav, lead market analyst here at Swyftx. And it's been a very interesting week. Obviously, last week we had the new Bitcoin all-time high. We had Ethereum running and chasing to new heights as well. But this week it seems to be a bit of a turn of the tide. We are seeing the market turn over and show a little bit of red. Some of those 7-day gains that were boasting double-digit gains previously, we're now starting to see flashes of red. And obviously, you might be wondering what's changed in a week. And while I think there's some really key things we have to unpack, there's also a bigger picture piece that I think we can't lose too much sight of. Overnight, we saw another piece of the puzzle for the regulation of the crypto industry come to life, and that was through the appointed crypto working group from Donald Trump deliver their recommendation on how to strengthen the American presence in the crypto space. So this is basically outlines how the US can become that US crypto superpower. Now, there were some broad strokes covered throughout this documentation on how to approach a crypto industry, now that we have seen some of the legislation greenlit over in the States most recently. But just to give some sort of idea on what this document contains, there's a lot of information just on how the working group and committee recommend that they develop clear legal rights for users and developers, which really is a big piece, not just to protect the innovators in the space, but also the consumers as well. There's some mention of how digital assets can become the part of the cornerstone and backbone of the banking system and what adoption and integration looks like on that part, as well as some further guidance on stablecoin policy, ensuring dollar dominance. It's all about the longer term optics of crypto moving away from this hyper speculative market towards a more, hey, the US sees this as a valuable piece of technology. But in the shorter term, like I mentioned, we have seen, I guess, a little bit of a jump, a little bit of a scare. And a lot of it may be to do with the Federal Open Markets Committee meeting that we saw overnight, or the FOMC. Basically, all you need to know is that this is the committee in the US that sets things like interest rates, as well as like guidance on monetary policy, etc. While the market wasn't expecting any rate cuts in this particular meeting, what it probably wasn't expecting was such a hawkish or not easing tone from Jerome Powell, the Fed chair of the FOMC. He was cited saying that he believes that the market is performing quite well in the current environment. And that comes as a very interesting shock to the market, as in a lot of his previous speeches, he's talked about how the Fed was ready to step in if there was any sudden need to when they look at their economic data. He seems to have shifted away from this, which may be something the market wasn't expecting, basically saying that there seems to be some elements around inflation that he is concerned about resolving, as well as just outright saying that there is a large slowdown in consumer spending, which they're concerned about, and that the committee as a whole believes that the economy is not performing too toughly through this whole restrictive policy environment, or how you could say it. So all in all, it's a way of saying that the market didn't quite expect Jerome Powell to come out and say that things are performing better than he expected, right? And this is even causing a bit of a stir within his own cabinet, with two of the committee members favoring that it is the time to pivot and move to a more easing, accommodative backdrop from a monetary policy perspective and really start to bolster and improve growth. There are data prints that do suggest that we are seeing job growth with higher than expected employment figures coming through just this week as well. And that gross domestic product, or GDP, the productivity of the country, has also come through stronger than expected as well. So you can see from the data perspective why there might be this sort of mismatching of expectations. And I think that's a key piece riding into next week as well, if the market potentially continues to process and understand its positioning to how the Fed is now going to potentially approach the likes of interest rates, the likes of quantitative easing. How is the market going to readjust its positioning in accordance with that? Because we also saw overnight just the expectation for rate cuts also diminished for September as well. So it even just opens up the can of worms of, do we see more rate cuts in 2025? So it's going to be very interesting to see the market digest this likely over the coming weeks and days. But obviously we're concerned about the crypto markets here and wondering, we've seen Bitcoin hit new all-time highs. What's the potential trajectory for the market, given we have seen quite a bumper July? Now, we can turn to seasonal data to try and help better articulate what to expect. This is in no ways a guarantee of what's going to happen. But when we look at the data from all the previous years, August and September, they often provide quite flat periods. When we look at the average gains in both these months, negative 2.2% and negative 5.5% respectively, the end of Q3 generally is a little bit of a lull. It will be interesting to see how the month closes off for July, how we start going into August, particularly with all these surrounding elements around the global macroeconomy playing out. But again, as we spoke about earlier, that long-term vision for crypto really probably hasn't looked any stronger. It really is a coming of age moment for the whole industry, which is very exciting. But that's all from me here today at Swyftx. Hope you have a lovely rest of your week. Catch you next time.